Our next guest thinks the market is due for a pause. Let's bring in Brent Schutte, Chief Investment Officer with Northwestern Mutual Wealth Management. Brent, welcome. Good to have you with us. You heard Mike there talk about what history tells us, and history tells us that when the S&P, says Mike, hits a new high after not having hit one for a year or more, that the performance is usually pretty good. Is what you're saying, does it quarrel with that thesis, or does it just mean we're going to have a pause and then we'll pick up and move farther higher?
Unfortunately, I think it quarrels with that thesis. I think this time is a bit different, given kind of what's happened post-COVID and where we're at right now. Look, to me, I think a lot of the good news has been priced in. People see finally inflation coming down. That was something we forecasted. Now we're worried that inflation is moving from a COVID thing, which is what that was, to something of an end of a business cycle thing. So we're relinking to an economy that looks late in the economic cycle, where wages rise, they stay elevated, and that puts upward pressure on inflation, which is where we think we're at right now. And given that backdrop, we don't think the Fed is going to be easing policy anytime soon. Certainly if they do, I think they really risk a wage price spiral. And we think inflation numbers have bottomed out, but they are certainly showing signs of pushing back higher. So, for example, the Cleveland Fed median CPI is rising. Core inflation is kind of stalled out in the 3% area, as has services ex shelter, which is in the 5% area. And so we think, these things are going to cause inflation worries to come back. The Federal Reserve is going to stay tighter, and the market will actually experience some sort of a pullback in the coming months.
I see in my notes that you say we continue to forecast a recession. You're fighting the good fight there. A lot of people have given up that forecast. You have not. I wonder why, number one, you see that as a probability. But number two, if there's going to be a recession, why wouldn't you then believe that the Fed would be more inclined to cut interest rates to make sure that the economy doesn't slump deeply?
I am more inclined to believe the Federal Reserve will cut rates when they see a recession, but by then I'd imagine the stock market would falter if history is any guide. And so to me, that's kind of the sequencing. I think you will see the Fed eventually cut rates once they see the labor market weaken, but that tends to be a trending type of an index. And typically when the Fed cuts rates, it doesn't arrest the stock market decline immediately, nor does it arrest the recession immediately. And that typically has a period of negative returns, which I think is more likely than not. Look, last year, we were fighting the good fight of inflation coming down, and no one believed us. That's happened. This year, I feel just as lonely as I did last year. I still think a recession is likely, just given that I don't believe the Fed is going to ease policy until you see that labor market weaken, which by then it's too late.
Well, listen, Brent, the voice crying in the wilderness is often correct. It's just unheard. Let me bring Mike back in here. Mike, we're looking for some data later this week. The fourth quarter GDP numbers. We're looking for the personal consumption expenditures price index. How much could those numbers move the markets?
I think, Contessa, pretty significantly. I mean, I think a premise for this market remaining on firm footing is the disinflation story has to remain believed and plausible, and it has to show up in those PCE numbers to some degree. I think there's some patience that we can have here, and I know the Fed is not going to be committing to rate cuts soon. I don't think it has to commit to rate cuts soon, but it also has acknowledged that there is room for making policy less restrictive, even if the economy hangs in there. And I think that's where the market is right now. The tracking numbers for fourth quarter GDP still look pretty good. Maybe we're not going to be quite as strong as 2% plus, but, kind of muddle through economic growth and inflation coming down is a decent backdrop, but it has to be proven out in those numbers.